Hi, one of the questions we often get from people who are receiving inheritance is it taxable? And there's a few things to consider to determine and answer that question. So in most cases, no, inheritance aren't taxable. Typically, you have to have a net worth, or the deceased person would have to have a net worth of at least $11 million or $22 million as a couple before you have to pay any kind of inheritance tax, or the estate would have to pay inheritance tax. So for most people in America right now, there's not a federal inheritance tax. Now you could be subject to estate income tax potentially, but here in the South, typically we don't have inheritance taxes on estates at the state level. Now there's a couple of things you should think about. One, if you inherit an IRA from a loved one, that inherited IRA, assuming it's not a spouse, will be taxable when you withdraw the funds. The funds have to be withdrawn over 10 years before, at that 10-year mark, you have to make sure everything's emptied out of the account and has been taxed. If it's a Roth IRA, it's actually not taxable, but you still have to do the withdrawals over a 10-year period, or a lump sum in year 10. If it's a brokerage account with securities in it, there's good news there in that you get a step up in basis. What this means is, let's say your mom was the last to pass away, between your mom and your dad. So your mom's passed away. She had Apple stock that she bought for $10 a share, and now it's trading at $100 a share. Well, normally if she had sold it, she'd have to pay capital gains tax on $90, right? In your case, her date of death is now her new step up in basis. So if she died and it was worth $100 and you inherit that Apple stock at $100 and you sell it, you don't have to pay capital gains tax. If it's grown to $105 by the time you sold it, you just pay capital gains tax on the $5. Or if it fallen to $95, you get a $5 write-off on your tax return. So that's a great advantage to passing on assets outside IRAs and Roths, is passing on brokerage accounts. Now, if you inherit an annuity, which we somewhat, let's say, I'll use a strong word here, despise annuities. I really don't see the purpose of them. Ultimately, an inherited annuity, the gain that you've received in that annuity is going to be taxed at regular income. Which is not something that you want to inherit. Unfortunately, there's not much you can do about it if it's already been in place. But if you're thinking about taking out an annuity, you're doing it for tax deferral reasons, that's not really helping anyone who inherits the annuity to be taxed at regular income. So if you inherit a house, same thing, you get a step up in basis. So the house they paid $40,000 for many decades ago, it's now worth $500,000. The new cost basis for the home is $500,000. So if you're going to make a change to the assets, you'd make all those changes certainly at the very beginning of that inheritance versus waiting. So if you wait, then your basis, while better than maybe what they paid for, is now probably growing again. And it's going to be harder for you to make changes because of taxes. But the actual amount that you inherit is not subject to a federal tax. Another question we often get is, if I give money, will I have to pay a gift tax? The answer by default is yes, unless the gift was less than $15,000. So if I was giving money to my son, my wife could give $15,000, I could give $15,000. That would be $30,000 in gifting that would not be taxable. If I gift over that, there is a way that you can make it non-taxable, which is lowering your exclusion. For example, so we're all living in this case, I want to gift my children $1 million each. I could do that, and there'd be no taxes involved as long as I filed with the government along with my tax return that I gave that money, and I want to reduce my exclusion from $11 million by $3 million for the amount of money that I gifted. Talk to your CPA on the process of that before you actually do it, but there is a path to be able to move money out of your estate and lower your personal exclusion and still not have to pay any type of gift tax. These are just some common questions we get centered around this. I hope this helped you. Feel free to reach out, email us, make comments below. I will be happy to respond.